Hey guys, today is Thursday, October 1st, 2020. Man, summer is gone, guys. October 1st, 2020. I wanted to show you a trading idea that I just barely put on here this morning on the NASDAQ futures, and I think it's an interesting trade. As you look at it, it's right here. This is the trade that I'm talking about here. And it really illustrates, I think, when you look at it in the risk graph. I think that's, well, let's get rid of that. There we go. There's the trade. And essentially what I've done here is I've done an unbalanced iron condor. I've sold a put spread down here with 9 contracts, and I've sold a call spread up here with 12 contracts. So it's a little bit unbalanced. And the reason for that is right in here, and we'll get to this. But these trades right here, these contracts, they expire tomorrow. So you can see right there, these particular contracts. There's the unbalanced iron condor. That's going to expire tomorrow. And, you know, it's just a typical iron condor. It's, you know, got a high probability of success, and it's pretty equally balanced there, equidistant with where the market is currently at, and it only has one more day to go. If you look at the numbers on this overall trade, I've got about $4,100 into this trade, and it brought in a credit of $500. Okay, but here's the kicker, and here's what is interesting, and it's this little aspect right in here, and this little boost right here. So in addition to this iron condor, what I did, let's see if I can, where the heck did it go? There we go. What I did right here was I purchased, I didn't sell, I purchased right here. Here we go. I purchased a debit call spread. So I actually purchased the 11,540s, and then I sold the 11,590s against that. That's where that kicker comes in right there. You can see that right there. I own this call and I am short this call. So the idea here, and again, these are not, these are 8-day expiration. So I've got 8 days in this trade. So essentially, this is a directional play. This is a biased play to the upside on the NASDAQ. And the reason for that is if we look at what drives the NASDAQ, and that's these 5 stocks, that's the monsters of tech. They're finally all clicking in unison. We finally have a day here where everything seems to be moving to the upside. And the markets do seem to be breaking above that 50-day moving average. So we do have a positive bias in the marketplace here. So I want to play that positive bias, but I don't want to do it essentially with my own money. This call spread right here cost me, well, we can take a look at it here. The call spread is right here. It was a debit of 26 cents. So if I go redo that exact same order, you can see it was about a $500 cost, right? I didn't bring in, I spent $500 on that debit call spread. So I'm okay doing that because in my trade here, well, let's just go back here quickly. You can see in my trade that I brought in a $500 credit on the iron condor portion. So essentially what I'm doing, to break this down, I'm doing an iron condor, I'm bringing in $500 of credit, I'm taking that $500 of credit, and I'm buying this debit call spread, which gives me this type of a risk graph right here. And it's interesting, I don't need a big bump here. We're at about the 11,500 mark here, and I need to get to about the 11,600 mark. So, you know, $100 in up in the next 8 days for this trade to work out. And again, putting up about $4,100 to do the trade has a potential of about $1,500, high probability of profit on the trade. So I just thought that's an interesting idea. I love anytime I'm doing a debit trade, anytime I'm doing a directional trade where I'm spending money and not bringing money in. It's not a credit trade, it's a debit trade, right? You got to put money out. I love to be able to do something that subsidizes that trade. And I think this is a good example of that. Whether it works or not will remain to be seen here in the next couple of days. But I just want to throw that idea out there for you guys.